Hi everyone, this is Rob Roy of Elliott Options, and welcome to this trade review of trade ID number 993. As you can see, it was on stock GWW, which is actually WW Granger, so they kind of reversed the symbol there. Now this one was a call debit spread, and I'll talk about that in a second, but it was in our impulse strategy, which is the one that's AI infused. So we've taken the general rules that I look for impulsive trades within Elliott Wave. We've added the element of AI in there to give us a higher score. And so it kind of filters down even further the amount of alerts that we look for. And as you can see on this one, we entered on the 31st of January. So here's the entry screen. So things to talk about here. First of all, when we look at the chart, you can see that we were breaking above this area of resistance. So we're moving to the upside. We had a big vertical move, and then we pulled back down. And I thought this was a really good entry to put this position on because it did seem like the stock was going to continue to go higher. The AI was telling us that. My indicators were telling us that. But we're dealing with a $900 stock, and two things were an issue here. One, the options were really expensive to try to do straight calls. And the other thing is if you went further out of the money to try to do a straight call, there wasn't the open interest there. So to get enough open interest and to not make it a really expensive trade, we did a call debit spread. So most people are, I think, normally looking for straight options on these. And notice it was a 980-1000 spread, so a 20-point wide spread. If I'm going to do spreads, I still want there to be enough room to, if you get a decent move in a shorter period of time, to be able to generate a nice gain. And that's exactly what happened. When you look at this, you can see that it was 0 days. And just as a reminder, if you're wondering, how do you have a 0-day trade? That means that the entry alert and the exit alert were sent out less than 24 hours apart. So we sent out the exit alert on February 1st. And now you take a look at this and you're like, well, you're nowhere near your target. Why are you taking the position off now? And if you look at the chart today, it has continued to move to the upside. But once again, even though it's moving nicely today as well, it's a spread. So when you're buying one call and selling a call, the call you're buying is working for you, but the call you're selling is working against you. And what you make is the difference between the two. And so when you have these big moves here, you're not missing out as much as it may seem like. But this comes back to one of the general rules that I have in the world of trading, and that's if you can make 30% in a day, that nullifies everything else, regardless of what your target price is, etc. Even though you haven't hit the target, if you can make 30% in a day, I take that every time. And in this case, we got just under 40% in less than 24 hours. So I don't care what the stock does after that. Again, we're taking that profit every single time. So some slightly different things to think about in this trade review. I hope you found that informative. I look forward to talking again soon. Take care, everybody.